We represent the trucking industry. J.B. Hunt was founded in 1961 by Johnny B. Hunt in Little Rock, Arkansas, and is one of the top 10 companies in the U.S., reaching the 1 billion mark in 1993, whereas Knight Trucking started off as a family-owned business in New York during the 1990s, and in the Forbes magazine was one of the top 200 small companies in 15 years in a row, growing from $13 million to $850 million in 2011. We decided to choose these two companies because they are one of the top 100 leading companies in the United States for transportation and have grown both of their businesses throughout North America and overseas. Income statement components. J.B. Hunt's operating income declined by negative 13.48% from 2016 to 2017, meaning that they made $97,230 less in 2017. The decrease will make expenses escalate, therefore investors will decide to choose another company to invest in, whereas Knight Trucking's operating income increased by 35.12% from 2016 to 2017, meaning that the company made $52,151 more in 2017 as it did in 2016, explaining that the company was transporting more goods in 2017 than they did in 2016. Income statement components part 2. J.B. Hunt's total revenue increased in 2017 by 9.6% from 2015 and 17. Despite the decline in the income, the increase in total revenue shows that the company is efficient enough to make more profit in the future. While Knight Trucking's total revenue increased tremendously in 2017 by 116.94% from 2015 to 2016, illustrating that the company has been going through good changes in strategies and making it a thrilling option for the investors to invest in. Balance sheet. J.B. Hunt's current ratio decreased by 80% over the course of 3 years. Even though the expenses increased while the ratio decreased, the company is still successfully paying off the debts since the ratio is above 1, where Knight Trucking's current ratio fluctuated during all 3 years, and where the ratio was lower in 2016 as it was in 2015 or 17, meaning that the company owned less assets and owed less liabilities in 2016 comparison to other years. The debt equity ratio increased by 36% for J.B. Hunt Trucking. The company didn't struggle to pay off the debts since the ratio remained above 1 in 2017, resulting in the earnings to increase, which benefit the shareholders' equity. Knight Trucking's ratio declined drastically in 2015. It was 3.73 to 0.467 in 2017, demonstrating that the company is relying on equity to finance rather than leverage, which is quite expensive. Investing activities. J.B. Hunt's capital expenditure had a small decrease among the 2 years of 5.51%. So during both years, the company is spending more than they are making, representing a negative number of 17.4% in 2017, while Knight Trucking's capital expenditure increased among the both years about 180.71%, so the company is able to pay off what they owe from their purchases and allocating their money in investing in a positive way to benefit the company. J.B. Hunt's net borrowing had a significant increase from 2016 to 2017 of 1,147.19%, illustrating that they changed their spending methods to have an increase in their long-term assets, while Knight Trucking's net borrowing unfortunately had a significant decrease of 372.99%, where we can see that their assets are also decreasing from these spendings. Two additional involvements. J.B. Hunt Transportation's key involvement is to reduce the effects of carbon emission by being the first major U.S. trucking company to order Tesla's new electric semi-trucks. Both J.B. Hunt and Knight Transportation have opened up websites and YouTube channels to benefit both of their companies individually. Financial comparison. Statement of cash flows helps investors determine if the company had a drop or increase in cash flows. In 2015-2017, JB had an increase in cash flows of $9,046, while 2015-2016, Knight Transportation had a decrease of $670, but an increase of $68,628 in 2016-2017. Since JB Hunt Industry had a steady increase over the period of 2015 and 2017, it makes a better option for investors to invest in, although Knight Transportation recorded a huge increase at the end of 2017. Financial comparison. Net income analyzes and helps understand the development of the company. In 2016-2017, J.B. Hunt documented a 1.13% and a 58.82% increase in net incomes. On the other hand, Knight Transportation recorded a decrease of 19.58% in the year of 2015-2016 and increase of 415.96% in 2017. An investor would choose J.B. Hunt as an investment choice due to its stable growth and continuous profits in the dividends. In conclusion, both companies are among the best in the business, but J.B. Hunt would be a better choice for investors because of its consistent growth and has the greatest market share among both companies. So we highly recommend to invest in J.B. Hunt rather than Knight Industries. Thank you very much.